us take a seat. Thank you for the nice introduction. Stani, how are you?
Really good to be back in Buenos Aires.
Yeah, and for the OG Avalanche people, if you remember, me and Stani actually talked at the last Avalanche Summit in Barcelona.
Yeah, and also I was in in Istanbul as well. And something interesting I've always noticed with the Avalanche events is that there's a lot of presence of local community, which I also see here, which is always nice to see.
Mm-hmm. Yeah, and I mean the title of this panel literally fits into a lot of what's going on in Argentina and Latin America, and we will get into that. But to start off, Stani, you are the founder of Avara, formerly known as Aave. And I remember you saying in the past that the mission for Aave was to really create borderless financial ecosystems and drive cross-border payments and so on. You could say it way better than I can, but from day one to where you are now, how do you think that mission kind of has evolved?
Yeah, I mean, for when we started, our main goal was essentially democratize finance. And we started in a very a simple way. Just experimenting on the blockchain and creating different kinds of financial experimentations. And back in those days, we were called ETHLend, short for Ethereum lending, and started to experiment with lending and borrowing. And then eventually that turned into Aave, and DeFi summer took off in 2020. And since then, we've been growing quite significantly. As of today, Aave protocol has somewhere between 18 to 20 billion worth of net deposits. And DeFi and overall is at 80, 90, almost 100 billion TVL at the moment. So it is a significant size of space, I would say. But at the same time, it's really tiny when you compare with rest of the finance. And I think it's still relatively small because a lot of the accessibility infrastructure is still being built on. A lot of the technology that we built from let's say, Aave, whether it's the lending protocol or the Go stablecoin, it's still very in its infancy. And to get this technology to wider adoption, obviously it needs to mature over time. And it needs to be more accessible. And also, more importantly, it needs to cater use cases where you need this type of technology the most. And in my opinion, what we're doing in a very simplified way is we're building resilient infrastructure. And you need resilient infrastructure in places like Argentina where there's that type of lack of trust from financial institutions or the financial system and economy in general. As a technology, it's applicable to everywhere, but it's here where it actually can have a significant impact. And I think we're still in a very early place where the bigger adoption cycles is in front of us, actually.
I've got to ask, you went from ETHLend to Aave to Avara. Is there a fourth name change coming?
Well, no, and actually, Avara wasn't we never changed Aave. So Aave Labs is just part of Avara, and Avara has this bigger vision of building the people-powered internet, which is Aave Labs, which focuses on DeFi, Lens Labs, which focuses on ownership of social capital and building resilient social networks, and Family Wallet, which we acquired last year, which will connect people to the space and expand with a great design and experience. So, by the way, we were joking about it that we're doing a lot of things at Avara, but I think these projects are all we will do for now. There's a lot to do in the space, and there's so little time for us to.
Yeah, 100%. And on the topic of our panel, stablecoins, payments, and real-world assets, obviously there is a lot of adoption on all three fronts. I feel like the stablecoin volume, I don't even want to guess what it is, but it's insanely high right now. And we see a lot of payment protocols popping up and actual real-world use cases, which is so funny that we have to put real-world in front of it. But I think out of all three of those topics, I'm curious to know, from your perspective, where do you see the most adoption right now outside of Web3?
I think there's a lot of institutional adoption, but and I would say like the most exciting adoption for me is that how stablecoins and DeFi can actually solve everyday problems. Now, everyday problem is that if you go to a store and you want to buy groceries and a few weeks later the prices are changing, or the next month and next month after that. So like I was last time in Buenos Aires 2 years ago in 2022 at that time, and basically I went to this exact same restaurant yesterday, and the menu had pretty much the same items, but 3 digits more of in the currency. So like the whole aspect of inflation is a really big problem, and it really hurt. Regardless, what is your social economical background, what is your experience, regardless how smart you are, it will affect you, and it has really consequential effects because everything you can actually create and form in terms of capital can actually melt in the sense. And that's a big problem because it means that financial opportunities are limited. Whatever you earn actually can disappear, and it doesn't incentivize to invest into the economy now. So like it's a really big fundamental problem that exists here. And the reason why it's so interesting to solve specifically in Argentina is because it has a really kind of a young, good population to actually be successful, has relatively good educational system. We at Avara, we have engineers here. They're most smartest people I've worked in my whole career. So like there's a really good fundamentals in the whole country, and they play really good football. And but the point here is it's such a good place to actually try to solve something like stability, financial resiliency, and make the whole like country to prosper and economy. And I think that if it's solvable here, that can actually be translated to elsewhere. And I think that's where, if you have a system like DeFi, where it's transparent, auditable, anyone can contribute, that's a step forward. But just the ability to be able to hold a value that is stable, being able to transact is very important. And the next step is to earn on top of that.
Yeah, I read a recent report last week from Chainalysis that the Argentinian stablecoin market is huge and growing because it is a hedge against, inflation and volatility and all the points that you just brought up. On that note, LATAM obviously has a broader ecosystem, and there's a stablecoin surge across the board. But where do you see the most adoption and promise for stablecoin integration in this region in the near term?
I think probably where in LATAM it works really well is that you have these bigger fintech companies that are looking for opportunities. So I could imagine that the more institutional kind of like aspect will be that the fintechs of LATAM will actually be interested in providing stablecoins as a way to earn yield and providing that access, because if you think about DeFi, it's really good infrastructure. So Aave has been here for years and years and has been resilient. When we started to build Aave, we had a lot of centralized lenders that were basically operating, and none of them exist anymore. Even at the end of those centralized lenders, the BlockFis, the Celsius, and all those of the worlds, they were using at the end Aave as well. Like they didn't even trust themselves. So as an infrastructure, it's like a really resilient. So it feels like quite an appealing opportunity to just plug in, and you have this 24/7 auditability. So I think that's where it comes in. And there's a little bit of like a centralization point, which is kind of like, I try to also think of like an educational piece to those financial institutions or like fintechs that want to integrate, but also I recommend to kind of like use more of these like more decentralized stablecoins, because if we are just moving stablecoins around in a centralized exchange, nothing really changes. It's still the same thing. But if you can actually transact in a non-custodial way and have the custody of your assets and these opportunities, that's like a future I would like to see here.
What do you think are some of the setbacks then? Because obviously there's a lot of advancements and innovations happening today, but there's also limitations that still exist. And given that you're inside, Avara, but also a bunch of different ecosystems and blockchains, what do you think is really stopping it from moving to the next step?
Well, I think the educational piece is big, because I don't think that all Argentinians know that there are stablecoins.
No, I would guess not.
Yeah, and then the second thing of like, how do you get there? Like, how do you get into a non-custodial kind of like a setting without like thinking about user experience? And everyone talks about user experience to the extent that it kind of like feels like a meme in the space, but really it's where we are at the moment. So we built this amazing, DeFi infrastructure, this amazing financial backend, and now we have to make it easy to interact with. So I think being able to just use your email, phone number to create a wallet, non-custodial wallet that you can store in the cloud, even certain amounts of funds, is a right step towards further. And down the line with account abstraction, you can make all kinds of recovery mechanisms. So I think that part is happening now, and obviously with L2s and things we've seen happening, for example, with Avalanche as well. Like we see now the transaction cost being so low that you could actually create like payment networks or payment channels or transact on chain without like being a big issue. Because 2 years ago when I was here last time, we were in a place where you still have significant transaction costs just moving around stablecoins. So obviously that won't scale here. Now that these transaction costs are significantly lower, we're a step further. So it's more about creating this tool set and then educating people, because once everyone here sees that this is a way to preserve your, not just financial freedom, but like having basic financial needs and you don't lose value, everyone starts to actually copying it. And I think that's going to be one path forward. So just improving the UX a lot.
Yeah, I actually went to, I've been here since Sunday, and this is my first time in Argentina, but I went to a store that was accepting USDT and Bitcoin. So to your point, yeah, education is a big factor, and I think it's slowly entering the market. And then on the other hand, like with credit card payments, there's like a 20 to 40% upcharge if you don't pay in cash here. But I would imagine with stablecoins, it's probably a 1-to-1. So
it's really difficult here. I think now even it's way more challenging than a couple of years ago, because I think even now, like, inflation is one thing, but also the prices are going up. So even with inflation, you still don't have, the base pricing is going up at the same time. So it isn't really an easy solution out, but I do think it comes through an innovation. So it's hard to also like maintain and fix economy just based on policies. I think people need to see innovation and something that comes out from this struggle, basically. So the more we actually focus on this problem, and the more we can think how to innovate out of it. And stablecoins are innovation out of this problem for now. And down the line, obviously, when we're in a place where all stablecoins are backed by US dollars, it's also not a great place to be. But the fundamental first step is to get a lot of this value on chain, so it's movable, you have your self-custody, and you can transact, and you have your financial freedom. And the next thing is to think how we improve the system and how we create a currency that is not pegged to any national currency at that point, or provide some sort of better financial freedom there. So I think that there's enough smart people in Argentina that really also wants to solve the problem, and globally, and adopt. And I think it's also a question of time when we get there.
Yeah, so we've talked stablecoins, we've talked payments, now let's talk more real-world assets today. What do you think is being done properly on this front? Obviously, Avalanche has done a lot of integrations with traditional financial institutions, they've worked with you guys. From your perspective, where do you see the state of real-world assets now, maybe even compared to a year ago? We were talking backstage about how some announcements today are like, oh, whatever, it's not even that big of a deal compared to if we heard that BlackRock was integrating with USDC 2-3 years ago, it would have been mind-blowing to everyone. So from your perspective, what do you see?
Yeah, I mean, real-world assets is interesting because I personally want to see more and more native assets, right? So what we can create natively on chain, and that becomes a valuable asset collateral and has utility. But the thing about real world assets is that there's so much value outside of the blockchain that could benefit of that transparent auditability and distribution that you get from on-chain and the execution environment. What I love about Avalanche is that you can create a really high performance environment for real world assets, especially when it comes to trading. So when you trade something really fast, like equities, that's where Avalanche can be really interesting, especially if you have an L1 that is fine-tuned to these types of configurations. I think that's going to be very, very exciting. And I think BlackRock probably has been able to show a little bit progress here in the sense that I don't think anyone expected that BlackRock will come on chain and start actually creating these funds on chain and distribute that way too. And now you have all these other traditional financial institutions that basically want to apply the same strategy. So it's kind of a nice domino effect that is happening at the moment. So I'm all for it, and also thinking from Aave's perspective how that could be beneficial and what kind of utility the Aave protocol can provide for RWAs. Down the line, I think now we will see T-bills and the rates are going to go down. So we probably will see more movements up in the risk curve. So probably we'll see more ETFs or credit-based products as well coming on chain. And then you have more diversity as well. And I think it's actually really good for the space. And Avalanche is positioned quite well to even host decentralized exchanges where you could actually trade these real-world assets in a very good frequency.
Obviously, we've seen a lot of traditional institutions come into the real-world asset space and tokenize. Do you see opportunities for government agencies or enterprise businesses in the non-Web3 side of things to also do the same?
Yeah, I think it's good that governments are involved and they try to embrace the technology and figure out their place. But the devil is in the details, because when you look at some of these CBDC implementations, they really suck because you're just using the blockchain, but having all that control, and you basically default into the old system where people really want to get away from. Because I think on-chain is not only about having a better, a more performant financial system, but actually people just want to actually have more financial freedom, own things that they possess, and being able to transact whoever they want to. It's basically a kind of a big fuck you to the traditional financial kind of system that we have, because we have the technology to actually build something better, but give more power to the people. And when you give more power to the people, you can actually see more innovation, you see more competition, and things that actually will benefit the governments, because it reduces a lot of overhead and lets the markets to figure things out, and also ensures that the people can actually manage and govern some of these functions that the governments don't need to actually do. So my kind of perspective is that the best case scenario is that if you can build something that is really, really valuable to governments and the people, but the government's role is effectively creating a clear framework where everyone can actually operate, but not really being the access control manager of these funds and assets.
It's optimistic. Hopefully the governments hear you and follow that.
I think it's possible, because I do think finance by itself in its nature evolves. So it evolved as things went and became digitalized, and now we're just removing things from databases to more like decentralized databases or systems. So with that, thinking, there's a lot of people involved in actually giving opinions of these policies. So I think there's just far greater benefits than actually things that will not benefit the people. So I'm optimistic on this path, but it requires a lot of work. So I'm not saying that we shouldn't focus on policy or we should trust, policymakers or governments to come up with a good legislation. What I'm saying is that I think they realize the benefits of the technology, but at the same time, we should be on top of the policy work as well.
How do you kind of expect on-chain assets and tokenization to open up new asset classes for investors, ranging from accredited investors to the average retail investor, given everything that has happened in maybe the past 6 to 12 months? Where do you see the most scale and opportunity there?
Yeah, I think definitely the most focus has been on the accredited investor side outside of the US on RWAs, and I think it's probably the kind of a risk profile that many of these institutions seem to be more comfortable on starting with. But there's good examples where, Franklin Templeton has the Benji fund that is actually a listed security that you can actually, as a retail, buy and sell, and that's on chain. So there's also examples where you have a kind of a fully regulated product. But down the line, I think this category of private offerings will grow a little bit more, and there's more competition and more assets, and hopefully creating a network effect where we see more of this value coming on chain because everyone else is doing it at the same time. And hopefully these organizations internally, they educate more people to show the real value that comes on chain. For some organizations, the real value might be that instead of using a database-based transfer agent cap table, they rely on the blockchain. And once you have volume, you have greater accuracy, and then you also have cost savings at that point. So some firms are actually purely looking at cost savings. Some firms are looking as an opportunity to tap into a new audience that is basically on chain and new audience globally as well. So I think that being able to offer something globally and accessible on chain is going to be really helpful.
I think we've talked a lot about financial use cases, and given the title of the panel, that would 100% make sense. But how would you encourage builders in the Avalanche ecosystem to think beyond financial use cases or financial startups and really tap into other areas, whether it's something like social networking or ownership or consumer adoption? What are your ideas there that you would like to see someone build?
I think a lot of use cases probably down the line will be outside of finance as well, because you can use blockchain essentially is a access control tool and kind of a rules engine. So you can apply it to any type of scenario where you need access control and you need some sort of a collaboration and you want to remove dependencies, make a system more resilient, remove, for example, trust. So finance is not the only one where you can do it. I do think DeFi will take a decade from here to actually scale, because finance has to be mature. So you have to convince a lot of people to actually use DeFi over time, and they have to get comfortable. And that's totally fine. A lot of us are here for the long game, and there's a lot that has to be built in DeFi before it's fully mature. That's how we see it in Aave. On, for example, non-financial use cases, what I think from Len's perspective is that I think ownership over your social identity, your audience, collaborative right access to blogs. We still don't have a decentralized newspaper at this point. We don't have decentralized writing communities. There's a lot of missing pieces here. So that's just a social part of it. And then you have also gaming, where we see just interesting work that Avalanche is doing on the gaming side and assets being able to tokenize them and trade them, they should all be on chain. And then when you think of physical infrastructure, like every building block could be connected to on-chain, and you can distribute access control very easily. Like there's just so many things that are still not built, and finance is definitely something where I recommend to build in DeFi, especially on the experience layer. But non-financial use cases are going to be really interesting, especially social, where the biggest companies as of today, one of the biggest ones online, they are social media companies, and they have all the data, and we're basically giving everything to them. Like you can actually own financial assets even if you don't have a custody, but you have very little ownership over your social data. So that's a big topic to work upon. And I think Avalanche as a stack is interesting because with this approach of L1s, you can now actually get the costs of the network like really low. And that means that you can introduce the amount of security that you actually need to consumer use cases. And that's a new thing basically this year. And I assume that next year we're going to have more of consumer use cases on Avalanche too.
100%. If you guys are hopefully taking notes, because that's free alpha there for you. But Stani, you said last month that DeFi will eat all of finance eventually. I feel like that line speaks for itself, but what did you really mean by that? And how do you kind of see that already happening?
Yeah, I think one big misconception is that you need some sort of a collateral to use Aave. And, and like there's this concept that like collateralized, under collateralized lending, isn't maybe like possible or hard, or how to solve it, basically. Those are the questions. And what I think is that, we can use and issue credit in the same way we exactly do it as of today across globally. But then once that credit is issued, we can actually tokenize that. And that's part of the whole idea of real-world assets. Once we tokenize it, we can then use something like Aave, where we use that tokenized asset as a collateral, extend credit, so mint go, or borrow. You can borrow USDC, and then push that credit directly to where it's issued. So you can extend the credit business locally. So the way I think about Aave and DeFi is that this whole like concept of all finance can exist in DeFi means that like once you have that value, it's in tokenized form, and there's certainty about the value itself. So obviously you can't just go and tokenize some, let's say, dogs, and put them on chain, and like it has to be like some sort of like a real value that someone is paying cash flow loans, for example, and credit ratings and whatnot, and then you can actually get that on chain and use in Aave. And I think that's the way of actually moving a lot of credit on chain, and then you can unlock liquidity and then fund more of these localized opportunities. So that's why I'm really bullish on DeFi entering into this kind of like under collateralized space down the line with tokenization.
I love it. Bullish on DeFi. Stani, we are at time, but thank you for taking the time to talk today, and thank you to everyone for listening in.
Thank you.